Welcome back. Despite new looming U.S. tariffs implicating China's special administrative region of Hong Kong, many still see investment hope in the city. At Monday's Milken Institute Global Investors Symposium in Hong Kong, participants from various sectors like finance and fintech are looking for bright spots to tap on in the city. CNA's Wong with this report.
A financial hub, an international trading center, and a tourism destination. Hong Kong reminded participants at a symposium that it's all that and more. Although the US-China trade dispute has also dragged Hong Kong into the fray, the city of 7.5 million is not letting that slow down its economic recovery.
Our strong fundamentals, resilient economy, unique role as a gateway to the Chinese mainland and Asia, as well as our quick stride to develop financial services and the tech sector, continue to provide unparalleled opportunities for global investors.
Hong Kong says it's pushing ahead on several fronts, such as implementing reforms to strengthen the competitiveness of its financial markets, ramp up AI research and development, and further enhance tax concessions to attract more single-family offices. Some participants laud these moves and point to the fact that because China remains the second largest economy in the world, Hong Kong still has an important role to play.
Hong Kong is the easiest window to invest, for the world to invest into China, and for Chinese companies to access global capital. It's also through Hong Kong. If you believe in that, then these should be enough of green shoots to propel Hong Kong back to its former prominence.
Some, however, believe investors are exercising caution as they're concerned geopolitical tensions may alter policies.
We are seeing the way US has been imposing tariffs on their biggest trading partners, and we are expecting some uncertainty around it even for exports from India, and there has been some sound bites around it. At this stage, I think it's more of a wait and watch.
But Hong Kong is not waiting. It has lined up several more of such investment forums so international participants can visit Hong Kong and see the potential firsthand. Despite external headwinds, Hong Kong's economy continues to grow steadily at 2.5% last year. But Hong Kong Financial Secretary Paul Chan says the charm of Hong Kong as a top business and tourism destination goes beyond the numbers. He gave the assurance that Hong Kong remains an open, vibrant and diverse city. Wong, CNA, Hong Kong.
Now, a number of discussions and debates at the Milken Symposium in Hong Kong included one focusing on the complex global macroeconomic outlook. Now, that was hosted by CNA's Beijing correspondent Olivia Xiong. Uncertainty around the Trump administration's policy, the role of artificial intelligence, and how China's DeepSeek moment would play into the intensifying tech war with America. All those themes explored by the panel. Olivia asked economist and author Kyu Jin about Beijing's latest drive to boost weak domestic consumption as it pushes towards its ambitious GDP growth target of around 5% this year.
Speaking of consumption, that is a major task, and the government announced this 30-point action plan. Is that going to be enough? Because as you mentioned also in your book, that Chinese have in their DNA this high savings rate. Is this action plan going to be enough to shift behavior for China to transform its economy into one that is driven by domestic consumption?
The last year's figure is something like Chinese consumption as a share of GDP is 38%, which is really, really, really very low compared to much higher levels in advanced economies, obviously. And it's actually gone down. I think the last few years there was more precautionary saving that is, in addition to the usual saving motive. But here's the core problem. I think that people in China, the ones that really have the highest marginal propensity to consume, are those hundreds of millions of people in the rural areas without the proper access to Social Security and access to health care and education in the way that urban residents are. If you look at the average pension of a rural consumer compared to urban consumer, it's only 5% of an urban consumer. If you look at the migrant workers, 300 million migrant workers, even on the same income as an urban person, they consume only 1/3 of what an urban resident would be. So we're talking about hundreds of millions of people in this big pocket of China, undereducated, underemployed. They should be the focus group. So some of the new policies which I do more agree to is not so much of the short-term ones. I mean, I think these are really helpful as well. But there's been talk about village rejuvenation, really reviving the countryside, bringing back some of the industries, building up infrastructure there, building up small cities, satellite cities around there to concentrate consumption possibilities and infrastructure. I think that's the right direction to go. And if you ask where China's potential is, well, it's there, right? That's a massive pocket of underinvested places that needs to kind of converge with the rest of the other cities. And and then there are other reforms. While urban land reforms have gone through, rural land reforms have really very much lagged behind. So, for example, rural residents have to rent 2 places, one in the rural area, one in the cities, without having any ownership in the rural area, so there's no wealth effect. So all of the reasons beyond the one, there's a cultural thing, there's a precautionary saving thing, is that the people with the highest marginal propensity to consume, they need to be the focus area. So part of the consumption policies is really to focus on the low income group, and I think that's the right direction.
If I just pick up on that, the leadership has also signaled that it has ample policy space to react to external uncertainties. Where do you see this policy space being?
Well, the Chinese government has so many tools, so many levers that can turn around. To just give you a simple example, right? The real estate crisis, everybody wants to do more there, but in China, in Shanghai and Beijing, we still have restrictions on how many apartments you can buy. Okay, Tianjin recently did something interesting. Tianjin, the place next to Beijing, said, look, anybody in the country who wants to buy an apartment here, they can get access to local schools. Why? Because it's all very, very much controlled, right? So even in terms of these small policies left and right, there are lots of different levers, but there's monetary space, there's still more fiscal space. If the central government decides to do more fiscal transfer to the local government, say, look, give back all the private, pay back all the private sector debt. Right? I think that would revive a lot of the economic conditions.